Welcome to Drill Down Earnings. We have the latest results from Applied Optoelectronics, and I've been practicing that lots more than I wanted to. Applied Optoelectronics. I'm Cory Johnson, Chief Market Strategist from Epistrophy Capital Research, and this is a stock I'm conflicted on. It's one of the few that I own, but it's in the same sector that we've been talking about a lot in the last week or so, and that's providing components for the movement of data using optical networks. Fabrinet does that. We talked about that last week. We talked about Coherent, another stock that I own. Again, this is not investment advice. I don't give investment advice. But we looked at Coherent yesterday, so I thought it was worth looking at Applied Optoelectronics today. Its Q3 numbers were both beating and missing Wall Street estimates. Wall Street wanted, they gave us $65.1 million in revenues, a little bit better than Wall Street wanted. They lost 21 cents a share. That was worse than Wall Street expected. But when we dig deeper here, we're looking at this business of selling these doohickeys. They sell these little connecting devices that you plug Ethernet cables in or optoelectronic cables into to move information through as fast as the speed of light. And sometimes long distances like cable TV, and sometimes really short distances like a data center. The data center business has really exploded. In fact, they've developed some technologies with funding from Microsoft, and from what we understand, it's being used in Microsoft's data centers. They have a more than 10% customer that's probably Microsoft data centers buying this gear, Applied Optoelectronics. So the quarter was okay, but the guidance was jaw-dropping. This company, again, I said, did $65 million in a quarter. They say they're gonna do, and it only grew 4% year over year. They say next quarter they're gonna do $99 million in revenue. That's the midpoint of the guidance. So just shocking growth from this company happening right now in the fourth quarter that they're gonna deliver in terms of the guidance they gave. So what do they sell? So they sell into the data center, as I mentioned, 63% of revenues, 32% of revenues in cable TV. And those businesses grow at these crazy volatility. I mean, you saw fantastic data center growth was actually down on a year-over-year basis in the quarter they're reporting today. The cable TV business up over 100% on a year-over-year basis. So really tremendous volatility, both in terms of the industries they sell into, but also the technologies that they are using. They talked about 400 gigahertz, 800 gigahertz cutting edge. They didn't talk at all about 1600 gigahertz, which is a bleeding edge, which we expect to see it sometime next year. But they talked about 100 gigahertz, the old stuff, selling quite well for these guys. And again, I mentioned their losses. They still were challenged by a negative 25% operating margin. But that guidance was so good that the stock that was up a lot today was up 10% more in after-hours trading. And that's after an 81% gain in the last year, and a really ugly 81%, where the stock went from single digits to $24 down to $14, back to $24 down to $8, and then up to $18, and now closing in on 20. What an ugly, painful ride for me. Anyway, Applied Optoelectronics CFO took most of the questions, not the CEO, who was also on the call, but Dr. Stefan Murry talked about wanting to get investors to look at all of the categories they have, not just the best selling, hottest, newest stuff. Here is Dr. Stefan Murry from Sugar Land, Texas, in the suburbs of Houston.
It's easy for people to focus on one technology, I think, and say, okay, this is where the growth is going to be. But the reality is many of our hyperscale customers are growing their infrastructure in multiple different ways, right? It's not just one thing that they're doing. They're growing their existing infrastructure, and they're growing their new AI-focused infrastructure at the same time. So, we're excited about all those opportunities. The reason why I highlighted the 100 gig is really that I want to draw people's attention to the fact that there's still some significant business opportunities and growth, even outside the AI, while we continue to focus our efforts and most of the industry on AI growth. All
right, so what's it all mean? Your big drill down earnings takeaway. So $65 million in revenues, a decent loss in the quarter, and worse margins than they expected. But the one number that tells us a whole lot, the drill down earnings bite, yeah, it's the growth for next quarter. Here comes the AI. 64% year-over-year growth is the midpoint of their guidance. Jaw-dropping, and explains why the stock has gone so crazy in recent months. Thanks for listening to Drill Down Earnings. I'm Cory Johnson.